All right, good morning, everyone. Dan here with tradingology.com and the trading room for 7/20/2021. Happy Tuesday to everybody. Good to see you, Kyle. Good to see you, Dave, as always, joining us from our strong market partners and awesome team. Hope your weather's been a good long weekend for you there, sir.
Good morning, everybody. Yeah, it's been okay.
You asked for heat and we sent the heat. You said turn it off.
Yeah, I said dial it back a little bit, please.
Well, we have an interesting roller coaster going on, that's for sure. As in case anybody was under a rock yesterday, we had a little bit of a negativity going on in the market. We had one of those what we call true trend days. I mean, it was slightly not 100% perfect, but pretty much all day the volume was stepping down. We opened up below -2,000 and never came above. So it was a majorly negative today. You probably saw the headlines. I think at one time we were down, what, 900 some on the Dow?
Yeah, I saw 905.
Before they rallied for the close to make it look better. Then today we had the exact opposite, where it opened up positive 1,000 and we're creeping up on positive 2,000 and we see the stair stepping up on the volume. So one thing I was taking a note of, and tech seems to do this a little bit more than the others do. We'll see. Obviously a big reversal bar already on the Dow here we see. But I got a feeling they might try and close this gap right away. We'll see. It's not a bad trade setup to watch for a couple longs there for NDX in any case. I actually did a real quick scalp that I shared in the Slack channels. I was literally on a trade for 12 seconds using some of our strategies that we use over time and got in and out for $100. I said, hey, that's a good 12 seconds. Tough to beat that hourly wage. I'll have to multiply 12 seconds out to a minute to an hour to see what that computes to.
Yeah. That's a good way to do it. Although I don't know how many 12 seconds you can fit in a day, you know. So. But I'm sure it goes out to at least, let's see, 5, 6, 300. It's at least $500 an hour.
I'll take that.
More than that. It's like 5,000.
Right. And that's immediate risk on and risk off. So I like to control it that way. I saw.
Yeah. Hey, looks like we're wearing matching tees today. This is lighter than it looks. So it's just the lighting is so bad. I changed my desk. I've got it in a different position now.
Gotcha. I was going to say it looks like a little bit different room.
Yeah, glaring light from a window. It's like, yeah.
It's that bright sun coming in on you.
Yeah, it bounces off my bald head.
I know that feeling. That's why you put the mountains behind you to make it look good.
That's good. Yeah, I should probably change my background. But anyway, that's what it is right now.
Good morning, Zadu. Zadu, I'll probably say it wrong. He says he's running a tad late. He's being sneaky. It's Tom.
He's being sneaky. Undercover.
Good stuff. So I figure we might as well take a look at the spreadsheet since we're seeing something we haven't seen in a while. But I'll pull over the charts to show the live info, but full bearish herding on the spreadsheet if no one has happened to catch that starting last Friday and then going into today. So major clues about this 2-day 1,000-point drop, saw that coming. And currently right now, we'll just get a quick live view of the Dow. It has handed back over the first column to bullish herding at the moment, but we'll see where it closes. We see the one green dot, if you guys can see that right there. I can zoom this in a little bit better. So we'll see if it lasts or not. So there's what the traps look like. And the bearish herding's coming, but we are positive. So the other thing to note was yesterday while we had that major down day, I mean, yeah, it recovered to a -25 here. But this was about, 75, 80 to the negative, I think I saw. And the strength was even worse. It was like -100.
Yeah, it was really, really weak. Actually, there's a pretty good chart that I put up in the Slack channel if you want to pull that up with the Dow.
Oh, yes.
The weekly chart off of that long-term trend line.
Yeah, that was an interesting one.
Yeah, I mean, you wouldn't think that a really, really long-term trend line would actually have any kind of technical level, indication at all in the market. But it did. That pink line there is the night. It connects the tops of 1929 market to the 2000 market. So it's got 2 points, valid trend line, all the way to where we are currently. And it hit that and bounced off of it.
Yeah, that was the late afternoon reversal that it hit and bounced. Just amazing.
92-year-old trend line. Now, how does that make sense, right? The market doesn't have that long of a memory. Traders in 1929 aren't around today, that's for sure. And it still bounced off that level.
Yeah, which we've actually seen a couple times here. You know, here it broke through, broke above it. I don't have the exact date on this. Is this a weekly or a daily?
That's a weekly, so you're
Okay.
talking that's probably in a fall sometime,
Okay.
or maybe not. Let me check.
Yeah, so we're this week 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 14 weeks ago, so 3 months, a little bit over. So March or April sometimes when it busted above it.
Yeah,
I remember talking about that.
Yep.
And then we see where it came back down near it. Then it did touch it a few times, but it closed higher. Just a month ago was the first time where it closed below, which would look very bearish, obviously. But then the next week, the Fed said, "Oh no, we got your back," and they came in and Powell saved us. So we'll see if that was them again or not. Now we're up there. So that double top, also we should mention that you saw that last week. That was within what, 50 cents?
50 cents. 50-cent double top.
They don't get much closer than that. I mean, how exact can they get outside of a couple pennies? So it was immediately right after that double top, we saw the drop.
Yep. And right now, if you take a look at the Dow where it currently is and throw a fib on there, we're at 30. The cash index is 34,410, which is 50% of the retracement. 50% of the retracement from yesterday, or actually from the top, the swing high to the swing low.
Gotcha.
Yesterday. So we're at 50% at 34,410. So we're right there at that 50% level.
It's just barely above it right now. We'll see if it holds or not.
Yeah, exactly.
Yeah, we'll see where the day closes. So just putting together all those, and we're probably throwing out a bunch of things we should probably mention. Dave's been doing this for 40 years. I followed Dave, or found Dave, oh geez, I don't know, coming up on 10 plus years ago. And I was obviously leveraged him for mentorship and put together, all these different, the double tops and different things that people see. We've had you guys are members, and anybody that's new did ask what they needed most help with. So what we're doing is we're putting together the next high level mentoring live training available in 2021, which is similar to what Dave did in the past. So we're just continuing it with the work of Tradingology and the partnerships with Strong Market to offer that. And we'll be going over these tips and things and live to get live interactive. Do you have exact questions? You don't have time to make it. You can catch a recording. The recordings will only be available to the people that are in the live classes. It's not going to be something that's sold after the fact. It's not going to be something that's put up on the regular site that everybody else gets a week later after it's done. We're going to do this live training only for the people that register for it. And we're looking to hopefully get the registration open this week. We still got a few things to iron out, but look for that coming soon.
Yeah, I'm excited about it. It's the first high level mentoring since 2018. I think that was the last time I did it. So a lot of things have changed. The market, constantly evolves. There's a lot of things that you have to stay on top of it. And if you don't, then you're going to be falling behind. I mean, one of the biggest things right now, of course, is the algorithms are basically trading the market. And all the tools that we came up with over the last couple of years, especially at Strong Market, have been to identify those algorithms and what they're looking for. And your target hunter strategy kind of ties into that. So it's going to be an exciting time. If you guys are interested in really learning the newest techniques and what we're doing right now in order to make a living trading, which is what I do, then you really want to kind of think about joining. I mean, getting involved in this class is probably, I don't know when the next one's going to be. It might be another 3 years before we do another one. So, just heads up.
Definitely. Yeah, looking forward to it. Let's see what else we got cooking here. Oh, probably should just mention, it's always, since the entire world's talking about it right now. It's the 2021 version of the space race. And we had Bezos reaching what exactly did they do? I didn't keep track, but apparently he's already landed.
Yeah, he went up. They broke that barrier of some sort. I forget what the name of it is, or not quite the barrier of
some stratosphere, some
stratosphere that is like a kind of a layer in space that, some people argue that if you didn't break through that, you're not really in outer space, but semantics,
Yeah, it's across the board. Bezos touches down after a historic watch. And then just last week we had Branson up there too recording. So I just thought it was funny that it almost felt like Bezos landed before Branson did, or is Branson still up? I can't keep track.
I have no idea, but I know I thought it was really quick. I thought for sure they'd be up there at least an hour or two, just kind of hanging around, but it looks like they shot up and then they came right back down again.
There you go. 100 kilometers up is what it's internationally agreed that you made it to space. So 62 miles. Tom's got the details. Good job, Tom.
There you go.
Oh, here's an interesting one I didn't see before. They're admitting on Bloomberg the inflation is here. I thought it was transitory, Dave. It's just temporary. Yeah.
I was watching Stephen Van Meter this morning. It just started actually just before the show went on, and he's talking about how the Fed is taking over money markets. Haven't listened to the whole thing yet. Very interesting. I heard someone else comment this morning that we're actually in QT. We haven't looked at the reverse repos in a long time, but they've been doing a lot of reverse repos. We were doing close to, what was it? There was an insane number. It was like $1 billion a week or something like that, wasn't it? Or night.
Yeah, I actually just pulled it up last week because I was watching that again. Let me pull up the list here. I got the link.
Yeah, it's a little crazy. I mean, it's a lot. And so remember when QE, I think it was back in 2014, 2015, the chairperson then, I think it was Bernanke, said it's not QE, but it was QE.
Right.
I mean, it was definitely QE, right? With the repo market. Now they're doing the reverse repo market, which is not QT, which is not quantitative tightening. So we've got, okay.
Yesterday was 860 billion.
Billion.
Friday was 817 billion. 776. Every day is between $700 and $800 billion. 859.
Yeah. So what they're saying, the person I listened to this morning said it's QT, it's quantitative tightening. So basically they have too many securities and they're trying to pawn them off on the dealers. And that's what the reverse repos are. So I don't know. I haven't looked into it that much. I gotta do a little bit of research on that. I've been too busy trading. Market's been really good. So I don't know. If it's quantitative tightening, they're doing it on the QT.
Yeah, they're trying to. We'll call it not QT, just like it was.
No, it's not QT, but they're doing the reverse repos. So.
And I just saw a headline. I'll pull up the chart in a second here. 90 billion wiped off crypto market as the Bitcoin went below 30K. So let me grab a new tab here for you guys.
Yeah, and we're still below it. So we talked actually last week about the probabilities, very high probabilities last week that we're going to drop below 30,000 because that was kind of a neckline where Bitcoin came down to before. Looked like it was going to revisit that, and it was that 30,000 line right there. We came down to it a couple of times. It's more of a range there between 30,000 and 31.8, and the more times it comes down to a level or it goes up to a level, it's going to break through the top. If it goes down to a level and keeps bouncing off of that level, the chances are pretty good, very high, that it's going to go below that level. That's exactly what happened.
And if anybody wants to know how far it's going, I got a fib that says it might go to 20,297. How long is it going to take? That's the unknown. But that's the current downtrend fib on Bitcoin. Where it started at the peak, we started a new downtrend. We're making lower lows. We're getting lower highs. So if you're looking for a target to maybe look at potentially reinvest, no advice. Maybe 20,000 is a safe haven, which also lines up with this trend line. interestingly enough.
Yeah. I mean, talk about a reversion to the mean.
20 cents. Yeah, get back in at 20 cents. That's a safe one too. I like it.
Yeah. I might buy some at 20 cents.
Right. So yeah, sorry crypto fans, but still not looking good there. And the rest of the market, they're blaming it that Bitcoin's dragging everybody else down. Well, yeah, I guess we're below.
Still, I mean, it's still 70% of the market, right? I mean, it's pretty close to, still dominates the entire market. And then of course there's Tether. What's going on with Tether? Jim Cramer on his show tonight. What's the name of the show? I never
Mad
watched
Money or something. I don't know.
Mad Money. Yeah, I think it's Mad Money. I don't really watch it, but tonight he's going to do something on Tether. He said he received a paper that kind of goes into detail about what's going on with Tether, and he's going to talk about that on his show tonight. Should be interesting. In the Slack channel, we posted a couple of papers. So take a look at those if you haven't seen them, but it's very, 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 very interesting.
Well, see, he's talking about because it's going up, and it's the only one that's going up right now. I don't know if this is the right. I got
no, that's not the right one. Tether is that's a good question. What
I mean, I had a few options here. If I go under crypto, I got Bitcoin to Tether. That.
It should be Tether USD. It's not that one though. I don't think.
Let's see.
You'd have to go to CoinMarketCap, I think, to get the actual.
It's not listed on TradingView. It's one of the few.
Because it's a stable coin. It's
That's
always
what didn't make sense. I'm like, isn't it supposed to be like $1?
Yeah, it's supposed to be $1 all of the time. That's why that's not the right.
That's why I couldn't believe when I saw 33. I'm like, what is this?
Yeah, no.
Okay.
No, it's supposed to be $1 all the time. So you'd have to go to CoinMarketCap to actually look at that.
Got it. Yeah, that's the fun in crypto. Big news that it's going down more. It's making headlines.
Yeah, XLM dipped below 20 cents, hit 19 cents last night.
Yeah, Ethereum's down to 1755, under 2000 again. And it's breaking its lows from June, or it's touching on them right now, 1708 or so. 1701 was a low, and then 1715. So we'll see how long that one goes.
Dogecoin is at 16 cents. No surprise there. It should be under a penny.
Right.
Yeah. If it's a joke when it started, it's always going to be a joke, and it should be priced accordingly. In my
That's
opinion.
what really, I really couldn't believe that when that whole thing came out, and it's literally been, you get Elon Musk talking about it and all these people doing it, making it a meme cryptocurrency basically.
Yeah, I know, it's ridiculous.
Well, look at our NDX. It's just about close the gap. Maybe I should have traded it instead of talk to you guys. Just kidding. I like talking to you guys.
Yeah, this is my favorite time of the day.
If anybody is trading that, one thing is you might want to look at taking profits off, because we are approaching a couple zones that might find resistance. So if you happen to jump on that and you rode this up, looks like it's been a nice little ride up on the Qs. Yeah, that's quite a few ticks on that it's moved. So looking good. The
internals are very positive. We're over 2,000 plus 2,000 on the advanced decline right now. So we've got a little bit of a true trend day going on. Actually, I mean, we've got the stair step in the volume. We've got we're above 2,000 now, but an actual true trend day though, it has to be over 2,000 within the first 15 minutes of trading. So we
and then never come down. So exactly. So this is the next thing closest to it, basically, is what this is.
Yeah. It's kind of a fake trend day, but it's it still shows very, very strong bullish sentiment here.
Yep, definitely. If we look at just the daily charts like we saw, and I'll mention, just about reversing yesterday's. So everyone's going to be happy now. It's up 527, and that gap will definitely close. What might happen here is I wouldn't be surprised to see it drop after it closes that gap too. We'll see. Depends on what the bears and the bulls do at lunchtime.
We've got a lot of bearish shorting on the spreadsheet, so I'm not convinced that we're going to stay up this high. We're at 533 on the Dow right now. If we drop below 2000 on the advanced decline, if we start to see a little bit of selling coming in here on the up down volume, we'll see. We'll see where we end up, but anything less than, I would say anything less than 34,250 would be somewhat bearish on the Dow.
Yeah, so we're below that 50% of yesterday's candle. That's always a big key too, just looking at those levels. It's another part of what we've done over the years, and more recent ones is the equilibrium points and how to be able to see that. So that's another thing we'll be talking about too, I'm sure.
Oh yeah, I still use them.
Definitely. And one thing to note too, the MT synth indicator, this was the first time started Thursday where it closed in the negative, which it still is, it's coming back up. So that's just another one of those indicators that we're keeping an eye on, because this was green for a long time. We have to go all the way back to June, early June, since it was a negative. And that was back when that was when we had the short little drop in June where it warned us. Let me get that back so I can see that. There we go.
Yep.
Here's the warnings. It's just like we use other indicators. This MT synth can warn you of, okay, it was going sideways here. And then, but it's still red. So it's like, hey, have your warning on. Boom. We had a couple, 3 days dropped and then it went green. And it's been green since. That's when the NASDAQ has rallied back from 13.5. So green forever. Then it went red. It said, hey, warning signs, guys. And then it dropped yesterday and then the next day. So that's just another indicator to watch out for. This is in the strong market bundles of scripts. So that's just one of the things, we take it naturally, I think, and just for granted that we've been doing this for so long. And it's just the little things that we can share with people to pick up those nuances. And that's just a glimpse of what we'll be covering in the training coming up. So yes, Tom, I did get your email late last night. I was going to let you know that this class is either going to be perfect, or Tom was asking if there is any private client openings. And occasionally they do open up. I don't have any at the moment because we are working a lot on that class coming, but either one will work, Tom. So whatever works best for you, we'll get it figured out, buddy.
If you go back to that chart, you can see that the Dow actually just turned red.
Yeah, just yesterday was the first one.
Yeah, and we're kind of like flashing a little red, green today. So, keep an eye on that.
Yeah, and if you technically look at it, the very first day was Friday.
That's right, yeah.
So this closed Friday, you could have said, hey, looking at all the bearish activity in the spreadsheet, we'll pull that back over in a second. Friday was right here. We still had the bearish herding was happening. We saw MT volatility rising. Everything was pretty bearish, and here's a big clue right here too. MT supply demand was negative, so I meant there was selling going on, and the Dow was positive. That's not normal. So you put all these pieces together, super high MT volatility. You could have easily set up a short and then taken it off right away in the morning tomorrow. If you wanted to be risk off, or you could have rode down yesterday's trade. Either way, but that's exactly what we look at. Dave mentions, here's a little peek glimpse of it. I mean, it started at a negative 8.4. Then the next day yesterday was negative 127. Today we're back at 5. So will it stay there? We'll see. That's just what we watch. That's part of what we watch. So we put all the pieces together and use data to make decisions, not the headlines. Even though we got to talk about the headlines because there's different nuances to the markets with it, but trading is off of the data, and we get that with the indicators and the signals.
Yeah, it's the data and it's psychology.
Definitely.
It's not you against the market. It's really you against you, just like you're playing golf. I mean, no, the course is not fighting against you. It's tough, yeah, but it's not fighting against you. It's not like you're not like battling actually anything except your own perception of what you're seeing. If you don't see the market the way it is, then you're going to be trading based on a perception that may be false. You have to look at the way it really is and not impose your belief on it.
There's the warning that we gotta wrap it up. Yeah, so as much as you think the market is against you and literally trying to take your money, the market doesn't care about you. You're just one part that makes the market, and that's as many stars in the sky as there's points that make up the market. That's what these indicators, and I like Dave's analogy that we always use, is the flight instruments. You know, this is how we fly. We use these instruments.
Okay.
There you go. Zadu, the famous one of today, says preach.
We'll do a lot of preaching, especially when it comes to psychology. You know, like for example, if you have a profitable trade and you have a belief that you know it's going to become even more profitable, and you see that trade erase into a negative territory and you have a loss on it, we're going to teach you how to fix that.
Yeah, what do you do? How do you figure that out?
I'm going to teach you how to fix it.
It's all going to be in there.
Yep.
So as soon as we have that registration open, we will let everybody know. Watch the Slack channels. Well, I'm sure we'll send out an email or something, but our goal is to have it out by the end of the week. So keep your eyes out, keep your eyes peeled. And with that, we'll catch you guys in the rooms. And one last update for today, because tomorrow is the next Wealth Masterclass update.
Yes, 1 o'clock.
1 o'clock tomorrow. So lots of things going on.
Absolutely. All right, guys, have a great day. Talk to you soon again. Bye.
Thanks, Dave. See you later.